Matt, one of the questions I also think about a lot is that in the last cycle, 5, 6 years ago, it was very obvious that if you as an investor wanted to participate in the upside of the crypto ecosystem, you invest in the underlying protocols, which was Bitcoin, Ethereum, Solana, whatever layer one it was. From my view, that's increasingly not the case anymore because we have applications built on top of that. We have stablecoins that are exploding, but there's not really a place where you can put your money on to profit from that uptrend. How do you see all of that? Where would you allocate your money if you look at those big trends?
Yeah, you got to buy it all. I hate to say it, but you have to buy it all. What you're saying is exactly right. Will it accrue on the token layer? Will it accrue on the equity layer? Will it accrue on apps? I think a crypto portfolio is not complete unless it owns a variety of crypto assets and a variety of crypto equities. If you don't have access to VC, you can still get pretty good access in the public equity market. If you look at, an entity like Circle or Coinbase or Robinhood, if you want to play stable coins and tokenization, that's a pretty good trio. If you want to play DeFi, maybe you should have some exposure to Aave. Maybe you should have some exposure to Ondo and Uni. If you want to play the infrastructure layer, maybe you need to own ETH and Solana. And of course, you want to own some Bitcoin. I think a good message for investors is think about the thesis that you have the most confidence in. The thesis I have the most confidence in is in 10 years, crypto is going to be more important than it is today. The things I have less confidence in is will the value accrue to the infrastructure or the app or the equity layer? You want to bet on the thesis you have the most comfort in. And so that means, as much as I hate to say it, a diversified portfolio of crypto assets and equities where you accept that some of these are going to go to zero and you'll still make up the difference because this entire market is going to 10 to 20x, right? And so accept the losers as part of having exposure to the winners and don't try to find the needle in the haystack. Just buy the haystack, as the saying goes.
Great advice, Matt. We're almost at the end of the show. Last question for investors coming into the market, investing first time into Bitcoin, private, institutional. What do you think is the biggest misconception that you will correct?
The biggest misconception about Bitcoin is probably that zero is the neutral position. If you think about the world of equities, equities are a $110 trillion market. Bitcoin is a $2 trillion asset. You should have, as a starting point, 2% of your portfolio in Bitcoin if you only own equities. That's neutral. That's if you don't have an opinion on Bitcoin. The starting point, just like owning the S&P 500 is the starting point for owning stocks, and maybe you want to overweight NVIDIA and underweight Tesla or vice versa, the starting point for Bitcoin is not zero, it's 2%. If you're optimistic, you want to be above 2%. If you're pessimistic, maybe you want to be at 1%. I think zero is crazy because it means you're just completely against the market. You think Harvard is wrong. You think Stan Druckenmiller is wrong. You think Ray Dalio is wrong. You think the Abu Dhabi Sovereign Wealth Fund is wrong. Maybe you're smarter than all those investors. God bless if you are. But the starting point is it's about 2% of the size of the equity market, and that should be the neutral starting point. And then you can over or underweight from there.